in the late 90s. The markets did correct a bit. Probably it was maybe at best a single-digit correction. But India still managed to outperform the global markets. So clearly, I believe that yes, we can have some bit of corrections here and there. But I don't believe that this geopolitical conflict has the ability to kind of alter the direction of India's long-term uptrend, and it's great to kind of once again see this that the markets have essentially taken this in our stride and are deciding or moving on, choosing to move on from here. So I clearly believe that not to really concerned about the impact of this geopolitical conflict.
But is it time really to move on? Okay, it's great when you see the ticker is showing green. I mean, not today, but in general. It is good to acknowledge the fact that there is resilience. But the reality is that it is still an evolving situation, and with you don't know with geopolitics where it could move and where it could head. So is it time to really move on or simply wait and watch?
No, I don't think this is the time to really wait and watch because these are kind of pretty much events on which it's hard to really gauge the direction. While on one hand we could pretty much think that over the weekend it could get more aggressive, but on the other hand, it's quite possible that over the weekend, things just probably get a lot more silent than what they have been since yesterday. So I probably think as investors, one should just focus on individual stocks, individual sectors, and if the market provides the opportunity, it creates the value. It's time to continue to be watchful, vigilant, and continue to act.
Nilesh, so tell me, if the markets were to fall further, if they don't, right now you're seeing a much more mature and resilient reaction, at least at an index level. Good earnings are getting rewarded. Titan is up 4.6%, L&T is up 4%, BEL, Tata Motors. But if you were to really make a fresh portfolio allocation today or maybe a week from now, tell me what would your allocation be like? Stocks, sectors, whatever you want to tell us about.
So Aisha, clearly one would still be focused on domestic opportunities, and that's because India's macros are getting better and better. Essentially, we're coming out of a situation where we had earlier tighter liquidity, higher interest rates, versus that liquidity conditions have eased, interest rates have come off, crude oil prices have corrected. And the domestic demand seems to be yet very resilient. We've seen some high frequency indicators for the month of April reaffirm that view and that outlook. So I'd probably still continue to be focused on domestic businesses. Within that, financials are a standout space, be it banks, be it non-bank lenders, or many of the other opportunities in financials. So that would essentially be a very big kind of a focus area. And the second essentially is the consumer space. The whole opportunity around urbanization and premiumization is getting better and better and stronger, and clearly believe that niche businesses in that space would be a great place to be. And third is manufacturing, which would include opportunities around energy, around defense, around electronic products or auto components. These are the three big pockets that one would be focused on. So it would be financials, consumer, and manufacturing. And for both financials and consumer, again, I still believe that digital platforms is the best way to really participate in these opportunities, as technology is helping consumers to come into the mainstream and is helping many of these businesses to fast forward their growth. So clearly, these are the bunch of 3 to 4 segments which should be the continuous focus area for investors.
All right, Nilesh, appreciate your time. Thank you very much for joining us. It was quick and snappy, and that's what I think everybody is looking at, just to get understanding from market veterans as to what should be the basic approach in this kind of a market panic, wait or watch, or time to put money to work.
If you like this video, then like, share and subscribe to ET Now.